Hi and welcome to today's podcast on life, pensions and everything. My name's Sarah Bedford, I'm one of the directors here at hmbaccountants and I'm joined from Andrew at Active. Tell us a little bit about yourself, Andrew.
Yeah, I'm a chartered financial planner with the team at Active. We're about a team of 15 advisors with a wider team of about 30 or so around that, and essentially we are independent financial advisors, chartered firm, helping people to make decisions with their finances, take some of the stress away and deal with that for them.
Thank you. Today we are going to look at issues around Pensions Awareness Week. Pensions Awareness Week will help people who are paying into pensions, looking at pension planning, and we are going to discuss various topics. We're going to look at what pensions are, we're going to look at the misconceptions about pensions, we're going to look at your retirement goals and how to keep them on track, and then we're going to look at pension changes and what they can mean for your business. Okay. So first of all, Andrew, tell us a little bit about pensions and what pensions are.
So it's a bit of a misconception, I think, in terms of what a pension is. It's not. It needs a bit of a rebrand, I think, doesn't it? I think people associate it with ceasing work, old age, getting this regular weekly or monthly amount. Really, today, your modern pension plan is just an extension of your personal savings. You might have your ISA, your bank accounts. If it was called retirement account or anything else, you could pretty much view it as that. The only real trade-off is that you can't access it until the minimum ages. But other than that, it is, in its modern format, just a preparation for later down the line, getting over that age 55 currently mark and starting to sort of transition into maybe you're not working, and it allows you to support yourself once you don't have that income.
Okay, thank you. When you are self-employed or when you're an employee, pensions work slightly differently. If you're self-employed, you can pay into a personal pension scheme, but obviously if you're an employee, you may have an auto-enrolment scheme at work, or you could be a business owner with a business scheme.
Absolutely, yeah. I think for the self-employed and business owners, the onus is much more on yourself to make those decisions. Your employees, thanks to the beauty of auto-enrolment, are going to default into schemes. You're going to be naturally enrolled. You don't need to do anything. There's no forms, there's no decisions that need to be made, and you'll get that minimum level of contributions. But definitely for business owners and the self-employed, you do need to actively make that decision yourself.
Okay. Are there any common misconceptions about pensions, things that people think about pensions that are a little bit of a, not true and people worry about them?
Yeah, I think it's the distance from it. We've clearly moved from a system where the employer took all of the responsibility, really, in what you might call final salary or defined benefit schemes. The public sector still largely benefits from that, but in the private sector, they've almost been eradicated. And now all of that risk and responsibility has gone really onto the individual or the employee. And with that, then you start to sort of have misconceptions around what the pension actually is. What is it? Where is it? It feels distant. Who's the provider? Mm-hmm. If you are with, say, a Nest or a Now, what do I know about that? Where is the money going? And I think engagement would be absolutely key. Just a little bit. You don't have to dive in too much. It doesn't need hours and hours of study and preparation, but just a little bit of engagement to understand where it is, where your money's going, and the benefits of that. I think it's, again, just a little bit of misconceptions around what it actually is, and trying to view it as just an extension of you going to work, you building up your money for the future.
Okay. So you've spoken a little bit about the benefits of pension contributions. Obviously, as an employee, part of the benefit of that, especially under auto-enrolment, is that your employer contributes, so it's additional remuneration in effect. What other benefits are there of contributions, and also for employees for increasing their contributions above the statutory level?
Yeah, what makes your pension different from saving or investing outside of that is tax relief. It's the ability to either have not paid tax and national insurance if it's going directly before you've had those, call it net pay or salary exchange, straight into your pension. You've not paid tax, you've not paid national insurance, so £100 of remuneration straight into your pension. Equally, if you're a self-employed person and you're paying in, that £20 that you might have paid as basic rate tax, if you put your 80 in, you're getting that added back on. And that's the key with the pension. If you put your £80 into an ISA, it is purely £80. With a pension, that's up to 100, and now you've got that extra £20 working for you. So for the trade-off of I can't access the money immediately until I get to the minimum pension age, it's the tax relief that kind of turbocharges, gives you a little bit of an extra kick, and certainly if you're a higher rate taxpayer, the benefits become even more.
And if you're a higher rate taxpayer and a business owner, the way to claim that tax relief back is to do it sometimes via your tax return, but obviously as an employee.
So if it's personal contributions, think of it money that you've taken either out of your business or that sits within your own personal accounts. If you pay into pensions, you're either doing self-assessment or you need to be contacting HMRC to reclaim the difference. You will get your basic rate relief at source, but you need to reclaim the difference. But for business owners, you've also got that option of employer contributions. So rather than taking money out of the business in salary dividends, it can go straight into your pension and be invested without. It's a bit of a way of getting money into your own personal name outside of the business that's then growing tax-free, and all the benefits that come with pensions after that.
And that's a great way for business owners in some cases to use their pension money to invest in maybe commercial property that their company can then occupy and other things.
I mean, that's the beauty of the modern pension compared to where we were 20-30 years ago. You do have options now, tons of flexibility. Stocks and shares is an obvious one, that's the go-to, but if you do want to look at other things, very often it's their own business premises that they're looking to purchase within the pension. The rent's coming into the pension tax-free, it's growing tax-free within there. If you do own your business, not only the flexibility for contributions, but what you can do inside that environment it's worth looking at.
Definitely worth looking at. And obviously when it comes out, there's an element of tax relief. Obviously some of it is tax, but the 25% can be taken at the moment tax-free. And even though you're saving for retirement, that age at which you can take it from me, comes along far too quickly.
This is another criticism I think of pensions, is that the goalposts can move and they're much more likely to get tax tweaks than the ISAs are, for example. So it is victim. You can see it at the minute. There's talk of will there be changes again to the pensions tax regime, whether they take it from within the pension in terms of what you can pay in and limit that, or on the way out in terms of the amount of tax-free you can get out of the pension or the rates of tax they apply. There's certainly things that the government can tweak at, and in a perfect world they wouldn't. We'd get more stability and simplicity, so you would get that engagement and confidence in it, but the minimum ages, the tax rules, you've got to be open to change with it.
And I think the thing for business owners is that because there's so many changes, that they need to be speaking to their advisors to make sure that at every stage they are making the best use of their pension funds and their
Absolutely. I mean, a great accountant is going to be working with a business anyway to sort of highlight areas where they could be contributing to that. And then from our side, from the financial advice side, it might be more specifically about limits to what they can get into pensions, and as you start to build your fund, there's other limits that come into play. We've got new allowances for the amount you can sort of take in tax-free cash and death benefits. So there are points where an advisor can say, you need to be considering this will be optimal for you, not to mention just the investment strategy and things that could enhance that.
Looking at retirement goals, one of the things that we say to our clients is that they need to plan, and that's not just for pensions, that's for everything. So they need to look at where they are now, where they've been, where they want to be, what age they want to be when they get to certain places. And part of that will be saying, when you retire, or when you decide to sell your business, or when you decide to step down, what are your goals? So once they know what their goals are and they know what cash they need to achieve that, they then need to speak to somebody like yourself, find out what income they need, therefore what pension pot they need, and work back to that. How do you help people maximise their pension pot?
Yeah, I mean, picking up on that first point, a lot of the work we do as financial planners now, hopefully as well, is kind of expanding that thought process. You don't know what you don't know, so it's helping you. We sit down with a lot of people and make these decisions. It's not just setting out a basic budget, but it's also what does good look like for you? How do you want life to look? What are you going to be doing? Starting to put some numbers to that, and it is always rough. You're never going to pin down your lifestyle completely, particularly when you've got a 30, maybe even 40 year time span for retirement. But once you have done that, we've then got some of the tech and tools to crunch the numbers almost, but in a straightforward way, trying to make it visual and easy to understand, to demonstrate, well, do I have enough? What options do I have to plug those gaps? Where am I going to take money from? Obviously, we'll optimise for tax and things of that nature, but hopefully the bottom line is we give peace of mind to say, I do have enough, and here's why. Now, financial planning isn't something you do set and forget. You don't do it at the start of retirement and then just leave from there, because there's variables, inflation and investment returns for one, but also your life and what you want to do, and family and health, and so it's a moving thing that you just adapt as you go along.
I think one of the other things that I think is important for people to understand is that pension planning shouldn't just happen in the middle of your life, in the middle of your career. The best time to start pension planning is when you're young, when you're very first starting work, because that means that you've got the longest period to be able to make those contributions.
Yeah, I think they say compound growth is the eighth wonder of the world, don't they? I think the time on your side from your 20s to your 60s is just, they do number crunching all the time, don't they, to say if you contribute this amount at this age, you would have this much in your pot, versus if you wait until this age. And you can get beat up by the numbers and feel a bit down that you're behind at times, but you can't get away from the fact that compound growth over that time would be the best. I think the only thing I would say on it is, when you are in your 20s, you're naturally going to have some other financial goals, first house, wedding, car, that might, compete for that. And just keeping one eye on retirement planning, making sure you're in the workplace pension, make sure you're benefiting from the employer contributions that you're due, and yes, certainly those contributions will be valued once you get to that point.
Are there any common pitfalls you find with pensions?
I think the biggest problems that I've seen as an advisor working with people, firstly, is the protections, and making sure that in this day and age, particularly with everything that's going on in technology and AI now that we're seeing, is that you don't fall prey to any sort of scams, or if Facebook is presenting adverts that suggest you can get unreasonable high rates of return, that you can access your pension earlier, that you can take more tax-free cash, all of these should be red flags, should be worries. And on that front, I would just say, always get a second opinion. Speak with friends and family, speak with an advisor, speak with a couple of advisors if you need to, but just get a second opinion. Don't take a cold call, don't take any Facebook adverts or social media adverts in general. And if it sounds too good to be true, generally it probably is.
There have been a few pension changes over the years. Obviously, there's potentially more pension changes coming up. If you're a business owner, there's a 60,000 ceiling on what you can contribute. Obviously, that depends on your salary. So if you're a business owner and you're taking a low level of salary and a high level of dividends, the dividends are not allowable towards the amount that you can put into your pension. Obviously, there are carry forward reliefs. Are there any other key changes that have happened that business owners and self-employed should be aware about?
Yeah, we were speaking about the annual allowance there, so that's very much about what you can put into pensions, and those limits have changed over time, and you do need to be careful when you get to the point where you can start taking money, that you don't take taxable income at a point where you're still working and reduce that further. So that's one point. The biggest, I suppose, notable change that we saw most recently was the removal of what was the lifetime allowance. So this was broadly over £1 million. It wasn't so much that it was a cap on what you had within your pension, but it was how much benefit you got out of it, either during your lifetime or on death. Now that has been abolished, completely removed, but in its place we kind of have two limits that are very much linked to what that number was, which is your tax-free cash, your 25% tax-free amount, which is still roughly just over £250,000, and the lump sum death benefit allowance, which is still just over that £1 million limit. And that really applies to if you are passing on you have a pot style pension, and on death your beneficiaries receive that. If it's over that limit, there'll be some tax to pay if they take it as a lump sum. But with the regime as it stands now currently, people can cascade pensions retained within their drawdown or pension fund onto spouses and children and whoever they wish, really.
Okay. Thank you. So, in summary, we've looked at pensions. We looked at how pensions can benefit you. the pitfalls and also the recent changes. If you would like to know more about pensions, obviously follow Andrew on LinkedIn, on Twitter,
Yes.
and on his YouTube channel.
I do have a YouTube channel as well, yes.
And catch up with his colleagues at Active. Obviously follow HMB, look at our podcasts, download our guide, visit our website. If you would like any more advice on pensions, please contact Andrew or myself. The one thing I would like to say about this podcast is it's been recorded for Pension Week 2024. Any advice and guidance that we have given today is based on the legislation as it is now. Obviously that's subject to change. If you would like to sign up for the HMB newsletter, you can sign up to this on the HMB website, www.hmbaccountants.co.uk, and this will mean that if there are any budget changes or if there are any updates, you will receive a newsletter and you will get the most up-to-date information. Thank you for joining us.